Hello, everyone. Thanks for joining, and welcome back to Wall Street Silver. Our guest today is Peter Boockvar. He is the Chief Investment Officer with the Bleakley Financial Group. Peter, glad to have you back.
Thanks for having me.
Yeah, it's a huge pleasure having you back. So, Peter, the whole world is basically facing a massive financial turmoil, and it's not just financial; it's geopolitically as well. And we have recessions being called from New Zealand all the way to Germany. What are you watching as this recession heats up?
Well, I think that at least in the U.S., people think that a recession is just this big event that happens, but many times it's a progression of things that unfold. And whether it's recession or not, I think is the game of semantics. I mean, if you look at 2022, growth was 1%. In Q1, growth was 1.3%. In Q2, it's estimated to be about 1%.
Right.
So the economy is barely growing, and I argue that as the months and quarters progress from here, the higher cost of capital that squeezes borrowers will continue to have a detrimental impact cumulatively on economic activity that will technically eventually lead to recession, but whether it does or not, it doesn't matter. The trajectory to me of growth is at best 1%, and likely as time goes on for the reasons I just stated, will continue to weaken here. It won't be a crash in the economy. It won't be this major event. It's
Mm.
going to be more of a death by a thousand cuts type situation.
Right. And I think one of the biggest questions out there is, have we made it through the worst of the banking crisis? What concerns you in that sector right now?
Well, the banking crisis happened because of bank balance sheets loaded up on long duration. That happened even before a credit cycle kicked in. What
Hmm.
we now have ahead of us is a credit cycle that banks are going to be very exposed to, particularly in commercial real estate. So there's still a lot more chapters to be written uh, in this book of how our economy is adjusting to this higher rate world. There is sort of a nonchalance out there that just because bad things really outside of the banks haven't happened yet, that they're somehow not going to, and that we've skirted the worst of the situation. But I continue to emphasize that keeping interest rates high for a while is its own problem,
Right.
and because every day, every month, every quarter, somebody has debt coming due that's going to be refinanced at a much higher rate than the loan that's coming due.
Yeah. And do you think, Peter, that the contagion from all these banking crises that happened in the recently, well, do you think will it spread to commercial real estate, or how bad of an outcome will that be if it actually starts hitting other sectors?
Well, it's already spread to commercial real estate,
Right.
particularly for those that have debt coming due. Now, if you don't have debt coming due for 5 years, then you have nothing to worry about. If you have debt coming due this year, you have a lot to worry about.
Right.
Uh, and it's not just office, it's any piece of real estate that was financed on a very low interest rate that no longer exists. So, that is definitely what the worry is. But it's not just commercial real estate. It's any business that
Hmm.
has debt coming due. It's any business that didn't hedge out floating rate debt. It's any household that has an adjustable rate mortgage coming due this year or has credit card debt that they need to pay interest on. It's again this higher cost of capital world. Uh, doesn't all hit us at once because not everyone has debt coming due all at once. It hits us over a period of time as existing debt matures.
Hmm. And with all these uncertainties, Peter, how important is it to own gold and let's say other precious metals like silver? Let's start with gold. What's your price outlook from now to let's say the end of 2023?
Well, if we just look at the main factors that have affected gold, it's obviously been the dollar and real rates.
Hmm.
What we've seen really is the dollar rally that started in June 2021 when Powell said at the FOMC press conference that they're thinking about tapering QE, and then the dollar rally that ended at the end of October 2022, just as they were ending the 75 basis point cadence of rate hikes. The dollar rally just ended up being a Fed that was more aggressive than others. But now that we have the Fed just about done raising interest rates, even if they throw in one more, I doubt they get two in. Well, we just had a 50 basis point rate increase in the Bank of England, we had the Bank of Canada, Reserve Bank of Australia, Norway, all raising interest rates more aggressively than thought. The dollar rally is basically ended, and the dollar now all of a sudden can't get out of its own way. So based on that relationship, that's going to be bullish for gold. What's kept gold in check over the past couple of weeks has been well, really over the past week, now that Powell has laid out on the table again the possibility of two rate hikes. So it's been very sensitive to this rise in short-term interest rates. But I don't think that there's much legs to that. And any pullbacks in the precious metals, I'd be buying.
So
And we own them already, so it's not like we're
yeah,
not
of
there yet.
course. So what do you do exactly when you're looking at gold and silver? When do you buy the pullbacks? Like, are you buying right now? Are you waiting for a little bit of a dip in gold? What are you doing right now,
I
Peter?
mean, we're in, so
You guys
we're
are
in
in.
and buckled up. So it's
Nice.
not like we have a full allocation in my model. So it's not like now for new clients who get the benefit of a pullback, sure. But generally speaking, in terms of our allocation to the metals, we're in.
What's your model like? Like, how do you, if you can share that with us, if you don't mind?
Well, it's a mix of assets. It's a global macro strategy, and
Okay.
uh, gold is a position just as individual stocks are, and some fixed income exposure, and so on. And but it's a decent sized position.
Absolutely. And getting a little bit back to the US government and Powell. So you're thinking there's max one or two rate hikes left, that you don't think they can go further than that? And do you think the Fed can even continue on their current path?
Well, I don't. While the Fed I wants to hike it at least one more time, and the bond market's pricing in about a 70% chance that
Right.
they hike at the end of July. I don't think they go because I think the next inflation number for base effect reasons, in large part, is going to moderate to the threes, and the jobless claim number and the payroll number I think have the potential to be disappointing. So I think there's some external things with respect to these two data points that could prevent them from hiking. But as I said earlier, even if they hike in July, I think that's it. I mean, it's after raising 500 basis points in a little more than a year,
Hmm.
it's almost irrelevant whether they hike or not. To me, what's much more relevant is how dedicated and stubborn they will be in keeping rates high for a while. That's the key question now.
Right. And talking about de-dollarization, people have been talking about the US dollar dying. Do you think the Chinese yuan or BRICS nation will end the US dollar dominance, or is it all just hype?
No, the dollar will still be the dominant currency for a while,
Right.
but over time, people will just use less of it, especially if emerging economies start to use oil not denominated in dollars. You can
Hmm.
call that de-dollarization, but it's just some competition for the dollar that is going to take place. But the dollar is still going to be the dominant currency. I mean, talk of it dying, I think, is nonsense. But there is growing competition, and there's going to be and it's not just the convenience of it. There is a desire to it as well to use the dollar less so in transactions, and energy and commodities are sort of um, a big dollar use of
Hmm.
for a lot of these emerging markets. So if they can use less dollars to spend on energy and commodity imports, then hey, why wouldn't they try to do it?
Right.
And now in other things, and they'll could be relying on the dollar, but there's going to be just less use of the dollar. It's where we're headed. The best days of the petrodollar are over, and but I don't think that necessarily threatens the dollar's reserve currency status. But I definitely think that is it could be a headwind in the value of the dollar relative to other currencies. I mean, putting aside the euro, the yen, the pound, which everyone looks at the DXY as
Hmm.
those are the biggest components. But look at the dollar action against the Mexican peso. Look at the dollar action against the Brazilian real. Even the Canadian dollar is trading really well against the U.S. dollar as a commodity
Right.
currency. So it's the U.S. Yeah, I guess you can call it peak dominance in terms of the U.S. dollar, but
Hmm.
just because you reach peak dominance doesn't necessarily mean you do a 180. It's going to be a definitely a drip in its usage for sure.
Absolutely. And you said a little earlier that you're all in on gold for commodities. Are there any other commodities that you guys have in your portfolio, like silver? Or what other commodities do you guys have?
Well, silver, yes, and we own energy stocks, both oil and
Nice.
natural gas, and some pipeline names. We had owned ag-related names like the fertilizers in the past. Fortunately, sold them around the Russian invasion a little more than a year ago. But I'm always now that ag prices have actually started to rise again. The CRB foodstuff index is actually at the highest level since early December, and now that's not just corn, wheat, and soybeans. They're actually lagging. It's sugar and cocoa that are at multi-year highs right now. So I have my eyes on the fertilizers since they pulled back so
Mhm.
much, but we haven't gotten back in just yet.
When you're looking at fertilizers, does it give you any type of indicator as a whole as what's going to happen to like food supply or food inflation? Like as fertilizer prices start going parabolic, does that completely correlate with inflation food prices? What do you see there?
Yeah, well, it's really the crop prices that rise first,
Hmm.
and then that helps the fertilizer names. When you think about it, it's the farmer that's buying the fertilizer,
Right.
and the greater the farmer income, the higher crop prices are, then they have more leeway to add more fertilizer to their sort of operations. Now, of course, you have the natural supply situation as well, and the producers getting it uh, into a finished product. But I think on the demand side, yeah, there's a pretty high correlation between crop prices and fertilizer prices.
You said silver. Do you guys do like producers, explorers, or just physical silver? Or what's your portfolio like?
It's mostly physical, but we do own some individual miners, in addition to some of the miner ETFs, just to diversify. Because at the end
Right.
of the day, mining is still a really tough business, and it's actually a pretty crappy business, to be honest. And we know the industry has destroyed a lot of capital over many years, so just be aware of that
Yeah, of
if you're
course.
not already.
Of course. Well, Peter, it's always a huge pleasure you coming down to Wall Street Silver and talking to everyone. And hopefully, as the market develops, we'll watch what Powell's doing closely, and then we'll have you back on to share your thoughts.
Great, I appreciate having me on.
Yeah, of course. Talk to you soon, Peter.
Thanks.